In India, trading often gets a bad rap. It's dismissed as gambling, speculation, or something only the daredevils attempt on the side. On top of it, as retail experiences usually dominate the conversation, people assume the entire field is unreliable or unserious. But that perception hides the truth. There is a whole industry that runs on the knowledge of trading, an industry that needs skilled people, and one that offers some of the most exciting careers in modern finance. Trading isn't just clicking buttons on a broker app. Behind every price on your screen is a vast ecosystem. Prop desks trading global futures, quant teams modeling signals, option desks shaping volatility, market makers providing liquidity, PMS and AIF traders executing strategies, and fintech platforms building the tools everyone uses. All of these firms need people who truly understand how markets move, how products behave, how risk evolves, and how trading systems work. If you're serious about this space, if markets excite you and you want more than just retail speculation, then you are stepping into one of the most diverse and intellectually rewarding industries out there. Trust me, there are great careers to be made in trading. There is a demand for people with real trading knowledge, and for those willing to learn and specialize, the trading ecosystem has far more opportunities than most people realize. I'm your host Sandeep Rao, and in this episode we are going deeper into the world of trading careers. Who hires traders, what skills actually matter, and how this entire ecosystem creates opportunities far beyond what retail trading shows you. With that, let's get started. As always, let's set the stage. This episode is focused on careers in trading and active investing ecosystem, and not about individual full-time trading. If that's what interests you, we have done another episode on that. The trading and active investing ecosystem covers a range of firms and entities that employ people who have knowledge, skills, and qualifications, which include both regulatory and non-regulatory qualifications. We will talk about each of these. Let me start with mapping the space. Before we get into the jobs and roles, it's important to get a hang of the ecosystem, the types of firms that exist in the ecosystem. One way to think about it is based on these 6 categories. First, entities that manage other people's money. Mutual funds, PMSs, AIFs. Each of these are SEBI-regulated entities with specific licenses for each. They are also called buy-side firms because they buy services like research and execution, etc. from sell-side firms, which includes brokers, investment banks, research firms, etc. The second are entities that trade their own money. Prop trading firms, global markets prop desks, trading desks within banks, and high-frequency trading firms, which are also called HFT firms. This is a very large and broad category which employs more people in total compared to the first category. Third is brokers and other intermediaries, typically sell-side players as they're called. This includes brokers both retail-focused and institutional-focused. Then we have firms which offer investment banking and institutional sell-side services, but these firms do not hire for trading skills. Fourth is fintech, or what we could call broking adjacent products. This includes everything from data providers, terminals, and service providers like Bloomberg to smaller fintech players who provide trade analysis and execution services. Fifth are research services. This can be done both at an individual level and can be set up as a company. These are entities or individual professionals whose core product is research that supports trading and active investing. This is again SEBI regulated and licensed. Sixth and the last is content and journalism. Starting from traditional mainstream media all the way to individual content creators, there are numerous opportunities for people with adequate knowledge of trading and active investing. While I share these 6 categories, do note that these roles and entities that employ these roles can be overlapping. For instance, a mutual fund may hire one person for trade execution, someone else for quant research, and someone else altogether for content. So what we have done now is to map the ecosystem. Now let's go one step further and examine the different roles one could play in any of these entities across the ecosystem. I will focus on the entry-level roles and the growth possibilities from there. One of the most common and truly foundational entry-level positions across the buy-side ecosystem, that is mutual funds, PMSs, AIFs, hedge fund style category 3 funds, and family offices, is the role of a trader, often also referred to as dealer. On the sell side, both retail brokers and institutional brokers also hire dealers to execute client orders and manage day-to-day trading activity. Prop trading firms, global market prop firms, and all other entities that trade their own money also hire traders and dealers. The difference between a trader and a dealer is the degree to which decision making is expected from the individual. A trader is typically expected to take decisions and trade, and a dealer typically executes the trades based on someone else's instructions. But these terms are used interchangeably. I also know many individual HNI traders who hire dealers to execute their orders since they trade very large capital and run multiple strategies. Even small brokers or sub-brokers, now called APs, hire dealers who place orders on their client's behalf after getting required confirmations on a recorded line. At Zerodha, it's called call to trade. It's a dealer at the other end who executes a trade when you call and give authorization to buy and sell from your account. Personally, I feel this is one of the best starting points for anyone serious about markets. You get hands-on learning about different orders, different products, how orders are executed across product types, and how liquidity looks like across different market regimes. Beyond execution, you also gain exposure to trade settlement processes, risk checks, and various back office and compliance workflows that keep the trading engine running. Talking about the skills required for this role, great traders and dealers typically bring a lot of attention to detail, strong numeracy skills, quick decision making under pressure, and process discipline and accuracy. Familiarity with terminals like Bloomberg or Refinitiv is a big plus in an institutional environment. Similarly, knowing how to operate common order management systems, or OMS or EMS as they're called, such as Omnisys, now Neat, FlexTrade, Fidessa, etc., is highly useful. Additionally, proficiency in Excel or basic Python helps automate routine tasks and makes a candidate stand out. Talking about the qualifications for this role, most firms require a bachelor's degree in finance, commerce, economics, or engineering. For regulated entities, the following NISM certificates are often mandatory and strongly preferred. NISM Series 7, that is Securities Operations and Risk Management, also known as SORM, NISM Series 8, which is Equity Derivative Series. These certifications signal that the candidate understands trading rules, exchange operations, and compliance requirements. While you may start as a trader or dealer, depending on your abilities, this experience may lead you to become a quantitative analyst in future, something I'll talk about next. In short, it's important to understand a trader or a dealer does not trade their own capital but executes order on someone else's behalf. They also engage in other operational work, which could include stuff like compliance and settlement. The next role I'm going to talk about today is that of a quantitative analyst, or also quants as they're called. This is the next most important and common role across buy-side firms and some sell-side research firms. I will exclude the HFT-specific skills here and will cover it separately. While quant analysts are most visible in hedge funds and prop trading firms globally, the demand for strong analytical and data-driven talent is rising sharply across Indian mutual funds, AIFs, PMSs, and quant-oriented research firms. This role sits at the intersection of markets, mathematics, data, and technology. Unlike dealers who focus on execution, quants focus on building, testing, and improving trading and investing strategies, models, and analytics that drive investment decisions. Depending on the firm, a quant may work on one or more of the following. 1. Developing systematic or semi-systematic trading strategies. 2. Cleaning, preparing, and transforming market datasets. 3. Testing hypotheses using historical data. 4. Evaluating strategy robustness using walk-forward tests, factor tests, and stress scenarios, etc. This is basic. Depending on the firm, it can also include portfolio analytics and optimization, assessing sector, factor, volatility exposures, all of that. Some firms may expect work in the area of market microstructure and execution. Some bit of data engineering like handling broker and exchange APIs, etc. also may come under the purview of this role. This role is perfect for someone who enjoys pattern recognition, statistics, probability, and turning ideas into code. The next entity I want to talk about are HFTs. While they also employ quant analysts, some of their roles, depending on the type of HFT they are, may skew heavily towards engineering. High-frequency trading or HFT firms use extremely fast computers to trade in microseconds. They work more like tech labs than finance companies, constantly tuning hardware, networks, and code to gain speed advantages. Common roles include quant researchers who study tick and order book data, quant developers who turn ideas into fast C++, Python code, and low latency engineers who build core systems like network stacks and exchange connections. Traders mainly monitor automated systems rather than place manual trades. HFTs hire people with strong coding skills, especially in C++, a good understanding of Python, memory and network optimization, Linux, and basic math like probability and time series analysis. They prefer candidates from computer science, engineering, math, and physics, and value competitive programming far more than traditional certifications. They typically hire from premier engineering colleges in India. For them, what matters most is the ability to build logic and code, optimize and run trading systems that push the limits of speed, precision, and computational efficiency. In other words, HFT roles are engineering heavy, demanding exceptional coding ability, systems thinking, and speed optimization rather than traditional financial knowledge. These firms look for people who can design and refine ultra-fast trading systems from core C++ code to network performance, making it a perfect fit for strong programmers who enjoy solving complex, low-latency problems at scale. So far, we have spoken about 3 roles: trader-dealer, quant analyst, and HFT roles. The next category, though relatively small, is extremely important in today's trading ecosystem. These roles exist largely in consumer-facing technologies. Be it with brokers or with broker-adjacent products, we are talking about product roles. These roles sit right in the middle of markets, technology, and user experience. Product managers in trading and fintech firms don't execute trades or build models themselves, but they design the tools, platforms, and systems that traders, investors, analysts, and brokers rely on every day. A product role in this space involves understanding how traders and investors think, how markets function, and how technology can simplify or enhance the trading and investing process. This could mean designing features for an options analytics platform, improving order management workflows, building risk dashboards, optimizing charting tools, or creating API-based execution systems. Product managers typically work closely with engineering teams, quant teams, design teams, and sometimes even with brokers or exchanges to make sure the tools being built genuinely solve real trading and investing problems. The skills needed here are a mix of domain knowledge and product capability. A strong understanding of trading products, futures, options, equities, basic strategies is absolutely essential. Product roles also need strong problem-solving skills, user understanding, clear writing, and an ability to turn business needs into tasks for developers. Comfort with data, spreadsheets, and basics of APIs or trading systems is also helpful. Good communication skills is essential because product managers connect the markets team with engineering. Most roles prefer degrees in engineering, finance, or economics, and experience in trading, analytics, or fintech is a massive plus. What matters most is understanding how investors and traders work, identify real problems, and build features that make investing or trading easier and more efficient. In other words, product roles in trading and fintech bridge the markets and the technology gap by focusing on understanding traders' needs, spotting real workflow problems, and translating them into effective tools and features. Moving to the next category of the day, I want to briefly touch on roles that can be both entrepreneurial and full-time corporate careers. It is that of a research analyst. This is a licensed profession in India. One must clear the required NISM examinations and apply to SEBI for a research analyst license. This license allows an individual or a corporate to publish or offer securities research, whether it's equities, derivatives, or thematic market analysis. Research analyst roles exist across the spectrum. Independent analysts building their own paid research services, analysts working for brokers that are sell-side research, and analysts working within buy-side firms such as PMS, AIFs. Research analysts working at firms are expected to create clear and compliant reports, do company research, share market views, sector studies, derivative ideas, or quant insights. The work can be fundamental, technical, or data-driven. Key skills for research analysts would include analytical thinking, clear writing, comfort with numbers, and depending on the style, some basic coding and knowledge of derivatives. Talking about the tools and applications a research analyst would need to use, Excel, TradingView, Bloomberg Refinitiv terminals, and other data tools are common. Also, unless one intends to do some form of original work, be it in fundamental or on the technical side, this space seems ripe for disruption with AI. That's my take. That said, since it's a licensed profession, it may still continue to exist. In short, a research analyst is a licensed professional who analyzes markets or companies and publishes compliant, insight-driven research. The role blends writing, numbers, and domain expertise, whether fundamental, technical, or data-driven. It is suited for those who enjoy forming independent views. The last of the roles I want to talk about today falls in the space of content, media, and financial journalism. This isn't a trading role in the traditional sense, but it's about reporting on markets, analyzing trends, and creating educational content for investors and traders. It actually requires a deep understanding of how trading or investing actually works, whether it's breaking down F&O expiry moves or explaining why volatility spiked or interpreting FII and DI flows. People in these roles need to understand products, liquidity, microstructure, and market behavior well enough to translate them into simple, accurate insights. These roles exist across business news channels, financial newspapers, YouTube channels, digital-first media houses, and fintech platforms that produce research-led content. This work involves simplifying complex market movements, creating explainers on strategies or macro events, analyzing company or sector trends, and often building a personal voice or brand around consistent, trustworthy commentary. In certain contexts, this work can overlap with data journalism, especially when using charts, data APIs, and analytics tools to tell stories with market data. The skills needed here are a blend of storytelling, analysis, and domain knowledge. Strong communication skills, whether written, spoken, or visual, is obviously essential. There seems to be a massive demand for this role because most traditional media journalists have limited understanding of markets, and hence independent journalism will sooner or later disrupt this space. If you followed my podcast with Tom Sosnoff, who created the Tasty Financial Network, he echoes a similar sentiment there. In short, content and financial journalism roles translate complex market activity into clear, engaging insights for a broad audience. They blend storytelling with strong market understanding and are ideal for those who enjoy explaining concepts, analyzing trends, and building a credible voice in the trading and investing ecosystem. With the rising demand for accurate trader-focused content, this space is ripe for disruption by domain-savvy creators. So that brings me to the end of this episode on careers in the trading ecosystem. I must say that I have not touched upon opportunities that can exist with the regulators, exchanges, and depositories. For instance, SEBI regularly hires for roles in market surveillance, research, policy, and investor protection. Exchanges like NSE and BSE hire specialists in trading operations, risk, product development, and data analytics. Depositories such as NSDL and CDSL offer roles in compliance, product, and technology that directly impact how securities are held and moved in the system. And lastly, there are many customer support roles at all brokers and fintech firms, which also require some degree of trading knowledge and experience. While these might not be the first roles people think of when they imagine a trading career, but they are deeply influential and offer tremendous exposure to how the market actually works under the hood. What I hope you take away from this episode is the trading ecosystem is vast and interconnected. Your career doesn't have to be linear, nor does it have to stay confined in one part of the system. Skills in analysis, risk management, execution, communication, and product thinking are all transferable across dealers, prop desks, quant roles, fintechs, brokers, mutual funds, media, and even the regulator. The ecosystem rewards curiosity, continuous learning, and the ability to think independently. So whether you see yourself coding strategies, managing risk, executing trades, or analyzing businesses, or writing about markets or even shaping policy, there is a place for you. The Indian capital markets are growing fast and new roles are constantly emerging as technology reshapes how markets function. Talking about growth opportunities, I would say there are practically no limits. I have myself seen dealers becoming quant analysts becoming fund managers, research analysts starting their own PMSs, you name it. As trite as the phrase sounds, sky is indeed the limit. So keep learning, be active, stay close to the markets, and stay open to opportunities. Because a career here is not just about the next role, but about the journey of building mastery in one of the most dynamic industries out there. Before I end this episode, I'll share 2 book recommendations that help me think about careers better. The first one is Designing Your Life: How to Build a Well-Lived, Joyful Life by Bill Burnett and Dave Evans. Both were Stanford design program professors. They teach readers how to use design thinking, the creative process used by designers to build products, to solve the wicked problem of designing a fulfilling life and career. While the name of the book is more about life, they have some amazing career advice there as well. I like the iterative approach that urges everyone to explore as many options, fail, succeed, reflect, and then refine. The next one is So Good That They Can't Ignore You by Cal Newport. It is a book that challenges the popular career advice of follow your passion. Based on case studies and psychological research, Cal Newport argues that passion is a side effect of mastery, not a prerequisite for a great career, something that I agree with him on. And with that, I'll wrap up today's episode. I hope this gives you a clearer picture of the vast landscape of careers in trading and investing. Do share your questions, thoughts, and feedback in the comments. I'll do my best to respond. Thank you for watching and see you in the next one.